everyone, this is a trader investor coming to you after a little time of a break. Not really for any particular reason. I was just doing some research and trying to find something new that I wanted to explore for my own trading. It's still work in progress. As soon as I finalize it, I will definitely be sharing with you. But today I wanted to talk about the power of demand zone and supply zone. I've talked about this a few times, but I really want to show you that power and how it works for your trading. And this can be used whether you're doing day trading, swing trading, or long-term investing. And for today's example, I'm going to show you how I added to my position for long-term hold. I wanted to add some Apple positions and some Amazon positions, and I'm going to show you why I added them and how I added them. Again, as I said, it's all about demand zone and supply zone. That's what I'm going to focus on. And so what I like to do is start with Apple. So Apple, at the beginning, at the end of yesterday, was in the 153 area, right? In the very high territories, not all-time highs, but in the very high territories. So when I saw that, I wanted to see, okay, I missed an opportunity to add down here. And why did I miss this opportunity? It's because I did not identify an area of value that I would say, oh, this is a good place to add to my position. So that's all right. Between 140 and 150, it's not a big of a deal when you're thinking about a very long-term hold. But however, I wanted to hone it down again today and say, hey, okay, I missed this down here because I was not watching the market for this opportunity. I was entering other positions, but not Apple position, right? I was not adding to my Apple position. So because I missed it, I wanted to see other opportunities. So then the next thing I do is go to the hourly, and because I don't regularly trade Apple, this is why I have a tendency to miss some of these moves. But with Apple, what you need to see is where are real demand zones and supply zones forming. And those are really critical to understand and see, right? Every time you see some consolidation, price comes down there. And in this instance, it moved down. You see price moved down, moved up. So there was a small consolidation. Price came back down, but it fell through. So it continues to fall through in the 149 area. So I want to go back and see, was there any area of consolidation in this zone, right? Any area of consolidation in this zone, and I see it down here. I see a consolidation, and usually on the supply zone, demand zone, if you have a rise, consolidation, rise, that consolidation area is good. But sometimes you have a rise, a pullback, and a rise back up, and so that pullback zone in a very lower time frame is a consolidation anyway. So I can also use that as an area of demand. So like this wick that you see, if it happens to come like it does here, it comes as a pullback, it gives you this wick. This is a demand zone that you can come after. Now, the reason why I'm not drawing it here is because we have this demand zone, and this wick actually went to that demand zone and collected any remaining orders. Go back to my demand zone video to understand what I mean by this remaining orders. But I see this, but because this was just a 1 hour move, real quick, come down and come back up, I left this demand zone for now, right? So this is how when I say I left it, is as I'm drawing it now, I see this wick, but I would say I'm going to leave it. Most of the time I say if price has come down there, I'm not interested if it has already come down there once. So if it does this, right, plays around this and comes back here, and usually I'm going to take this off. However, because this was just a very quick move, it's possible that there are some orders further down here. And so what I want to see is, here. As you can see, price did that here and it reversed. So this is no longer valid because it's already used. So the next area that you see is this zone. This is the next area that you see. And in this zone again, price moved away from that, came back down and collected, came back down again and moved up. So truly this, I'm not interested in this, but I want to see further to the right if I have an area of value based on this scenario, right? This is what I want to see. This is what I mean by I missed this opportunity, right? It gave me this opportunity, even if you say all the way down here and I get this and I miss it, fine. If I was monitoring it, I would see, oh, here's a demand zone, boom, it came, boom, it came. It gave me two opportunities that I did not capitalize on. So I missed these opportunities. So now the next opportunity that I want to see is as price is moving up, it consolidated a few times, but today after earnings, what did price do? It goes right down to that demand zone and reverses. These demand zones work like clockwork. You will tell me, what do you mean by clockwork? Because sometimes we see this. Sometimes we see this. But 9 times out of 10, what we actually see in a lower time frame is price will do this, touches it, plays around there, touches it, plays around there, and then it does this. We see this a lot, right? We see this a lot. Even when it collapses, it has a tendency to stop the first thrust. That push down, it stops it, and then it will continue to collapse if there were not a lot of orders. But as long as there are some orders, usually it captures it. So that's why I'm eager to look at these positions and this demand zones, because they tell me what's going on. They really tell me what's going on. So with Apple, this is what happened today. Price collapsed, reversed. If you look at the broader market didn't move much. Yes, it did. It gapped down a little bit, but because Apple, Amazon was the strongest, in terms of holdings of the SPY, of course they moved the SPY. So with Apple, sometimes I don't even know why I don't add Apple to my look at everyday list, but that's neither here nor there. So with Apple, it gave us this opportunity. When price comes down here, this was time to add to your position or get long. Even if you day trade it, you would know, oh, I'm at a demand zone, I can take a dollar move up and exit, or let it ride, and because we have this gap, so you could have closed this gap. Did it close 50% of that gap? Maybe, right? From high to low, it went to 50%. But from a gap perspective, right? From a true gap perspective, what I look at is the first hour of trading to the last hour of trading the previous day. We didn't quite make it to the 50%. So I'm sure there's still more room to the upside first before it collapses, or it continues to move up. It depends what the weekend has in store for us. So let's go to Amazon. Now Amazon I watch regularly. So as you can see, I draw my areas regularly. And what I've been waiting for is not to enter short. I've been waiting to enter long when price gives me an opportunity, and this is what it did today. As you can see, it opened right at the bottom of that demand zone, even went further. I see this wick as manipulation, tricking some unsuspecting traders, retailers, to go short. And of course, in Amazon, from 33 area to 32.75, right, a 25-point move, is no joke. It's a significant move, especially if you do a 0-day expiration option. If you capture this move, fantastic. But for me, instead of playing around with guessing where is the next stop, is it going to go here, or is this really the demand zone that it wants to hold? Well, manipulation took place and price reversed. So next area of value is this demand zone, which has not been tested yet. So it's possible that Amazon is going to make lower highs and is going to come down here, fulfill this, and then reverse back up here. Right, so it's possible that it's going to do this. So today's video was really focused on this, identifying an area of value, identifying the demand zone, so that when price comes to your demand zone, you take a position, right? And this for me was for a short option play. This is exactly how it was set up. It was set up this way. Apple was for my long-term hold. I wanted to add to my Apple position. Amazon was for my day trading, swing trading position, and I added to that position as well. So both of them gave you good, fantastic opportunities. So this is why I wanted to share this video. Two different trading or investing purposes, same results, right? Same setup, exact same setup. Whether you're day trading or you're investing, same setup. I like to add in more to my positions when price gives me an entry. I don't like to just say, hey, Apple 150, 140, 170, doesn't matter because I expect it to be 500 in 10 years or more. But instead of 170, I like to get it at 140. I like to get it at 130. That's what I want to do. And if you multiply, if you get 10 shares at 130 instead of 170, right? So that's a significant amount that you can add 2 more shares with that. So that's how I look at it. So I have a certain amount that I want to invest, and the way I invest that is the lowest entry possible in the setup. So Amazon, if it was a long entry, this was the setup, right? It came at an area of value, I'm entering. If this area collapses, it goes to the next area of value, and I have more to add, I'm entering. So this is how I'm looking at them. So today's video was really focused on Apple and Amazon to show you, hey, here are opportunities. And I'll just give you a quick bonus on PayPal, because on PayPal, what I have done is I've added to my positions as price was collapsing. I've already removed them, but I saw a demand zone. I added a position. I'm seeing another demand zone, and I'm waiting for this demand zone to kind of be used and price go through most of that demand zone. That's what I'm looking for, to add again more to this position. If it doesn't, if it breaks up, I can still add on the way up, but I'm trying to see if I'm going to get an opportunity to enter down here. Again, why? Because I'm identifying these zones for my entries and for my exits. And the reason why I've drawn the supply zones is these are first signs of trouble. So if price enters this supply zone and collapses, then I will patiently wait for the demand zone for my entry. If it slices through this supply zone, then I might add to that position, because for long term, I just want to make sure that, hey, is there near the bottom, and I've seen the chart showing me I'm near the current trend bottom, or there's more to the downside and I just keep waiting. Ideally, the further down it goes, the happier I am for my entries. For me, these big movements down don't scare me, because I just keep adding positions, right? The goal is you keep reinvesting over the next 10, 15, 20, 30 years. Those are going to come out good. I'm not suggesting you buy PayPal. I'm not suggesting you buy Amazon or Apple. I'm just saying these are some of the stocks that I have in my long-term hold, right? For my long-term hold, some of them are from this list, but this list is mainly for my day trade. I just want to see what I can capture on a daily basis because they all move nicely. Alright everyone, it's been a long video, but it's an overdue video. That's why I wanted to go over all of this. Take care for now, and I will see you in the next video.